If you were lucky enough to hear Charlie Munger rant about the horrific financial crisis America would suffer at any point in late 2023, you might have gone immediately to hide in a deep cave. Just before he died, Charlie chatted about why the states would soon suffer economically and what you could do to cushion your cave. Not even Chicken Little, who once warned anyone who would listen that the sky was falling, had as many awful things to say as Munger about the USA's sad economic future, just before he passed away at age 99, less than a year ago, only 34 days before his centennial celebration, mind you. Munger, by the way, was Warren Buffett's right-hand man for decades, as well as one of the most famous and successful investors in the chronicles of mankind. Back at the time Charlie was receiving a top education within the pretty ivy-colored walls of Harvard Law School, and you're absolutely right to guess that was quite a few decades in the past, the New York Stock Exchange managed to trade 1 million shares of stock a day. At the end of 2023, when Munger finally went to a better place, the same market came to witness billions of transactions in a single period of 24 hours. Nobody needs a market that's so liquid, the Berkshire Hathaway honcho argued. In his harsh words, this wretched excess is exactly what wrecked the US economy at the tail end of the Roaring '20s. That kind of wicked excess then ended up in the Great Depression, one of the worst periods in American and world history, and the Great Depression gave the world a monster named Hitler. Wow. Was Munger really warning that the economic tailspin he predicted at the end of 2023 would present us with another viciously evil dictator who could possibly do away with millions while leading to the economic ruin of the United States, the world's biggest and most excessive market? But hold on for a minute. What Charlie actually said about America's insatiable appetite for stock trading near the end of his ripe old life was this: what we're getting is wretched excess and danger for the country, and everybody loves it because it's like a bunch of people getting drunk at a party. They're having so much fun getting drunk that they don't think about the consequences. It's fair to ask, who was this crazy and humorous character named Charlie Munger anyway, and how exactly did he make such an incredible amount of cash investing conservatively? And why should we listen to his prescient words, especially if we find out from other trustworthy sources that the massive American economy may indeed crash tomorrow? After all, Charlie's already 6 feet under. In other words, he's dead and long gone. Mr. Munger did live brilliantly for almost 100 years. It's his partner, though, Warren Buffett, who usually gets the lion's share of credit for creating one of the planet's biggest, most renowned investment companies, Berkshire Hathaway. The firm's based in Omaha, Nebraska, right in the heart of the prolific U.S. corn and hog belt. In fact, go to that spot today, and you'll surely find almost nothing but corn and hogs as far as the eye could see. Buffett became legendary for his conservative approach to money management. But without his balancing act Charlie, Warren wouldn't have only eaten breakfast at McDonald's to save money. He might have been flipping burgers there to make ends meet. In fact, Munger talked Buffett out of so many misconceived moves over the years that the latter called him the abominable no man. Since their company and its investments made the two seniors money hand over fist for decades, along with thousands of their disciples who attended their courses and seminars, received their straightforward newsletter, and benefited from their down-home advice. They were allowed to carry on telling truly corny jokes and tall tales. One such yarn from Munger went like this. Now I've got a story that I tell. A young man comes to see Mozart and says, "I want to compose symphonies." And Mozart says, "You're too young to compose symphonies." He's 20 years old, so the youngster replies, "But you were composing symphonies when you were 10 years old." And Mozart says, "Yeah, but I wasn't running around asking other people how to do it," Charlie quipped. Yet one key reason Buffett and Munger became such cult investment heroes was precisely this down-to-earth, transparent approach. Both often said there was no secret to their success. They just kept repeating some tried and true platitudes about hard work and frugality in particular. The two investment gurus were notorious for skimping on expensive personal stuff. In Munger's case, he went through life avoiding traps by doing things like living in the same humble house for 70 years. You might guess that newfangled investments like cryptocurrency weren't too appealing to a cautious investor like Munger. And you'd be right. Sometimes I call it crypto crapo. Sometimes I call it crypto shit. It's just ridiculous that anybody would buy this stuff. It's totally, absolutely crazy, stupid gambling. Charlie gave his potent opinion to CNBC. Indeed, Munger went on to state that avoiding crazy at all costs was a crucial cause for his longevity and success. Alright, so you say you want to last long and succeed too. Then you might as well hear some more investment advice that Charlie offered Warren. Actually, Charlie threatened Warren is more like it. Buffett recalled a time he had to replace a corporate jet, and he wrote to investors to justify the $6.7 million price tag. But Munger didn't like the lavish expense one bit, recounted Warren in the letter. Charlie's idea of traveling in style is an air-conditioned bus, a luxury he steps up to only when bargain fares are in effect, Buffett concluded. At the end of the day, Buffett claimed that Munger forced him to change his thinking in very basic ways. He made the big boss focus fiercely on buying wonderful companies at fair prices rather than fair companies at wonderful prices. What was a fair price to Munger? It was definitely a reflection of his upbringing during the horrors of the Great Depression. He earned all of 20 cents an hour busting his butt at a grocery store. Adjusted for inflation, that's a measly $4 an hour today. Go right ahead and try to hire somebody now for those peanuts. Best of luck. But let's get back to the message at the beginning of this video. We don't want you to have to stay in that cave forever, even if Charlie warned that Armageddon was coming to the US economy at any moment. In his 99 years on this earth, Munger saw just about everything and weathered every imaginable financial fiasco. A little like Chicken Little, he warned that the coming crisis could be the worst ever for the USA and its global cohorts. According to Charlie, the sky really could fall on us at any time due to a disastrous combination of specific modern circumstances. First, Munger moaned about the sorry state of the commercial real estate market in the US. At the end of 2023, banks were awash in bad real estate loans, and the storm brewing threatened to swallow financial institutions. In his last shareholders meeting while still alive, he reminded us bluntly, buildings don't go away, but owners do. Second, Charlie became even more of a snarling bear as he spoke of a worse kind of inflation than ever before plaguing the US economy. Different from the old days, when the Fed's Volcker was allowed to do whatever was needed to keep nasty inflationary pressure under control, Powell doesn't pack the same punch, said Munger. Finally, with all this inflation afoot in the world, the Fed and nations like Japan and Latin American leaders simply print too much money. Charlie called this action nothing short of seductive. It could be just like when Germany's Weimar Republic tried to do the same and Hitler suddenly found his way to brutal power. Inflation will rear its ugly head once and for all, and the gates will lay open for more seductive dictators. What? Did Munger utter the D word yet again before he left us? And what will happen if the US dollar goes all the way to zero as Charlie also forecast? After all, the dollar has lost 86% of its value since the US left the gold standard in 1971. Following all these dire warnings by the recently departed, you'd probably like to know what we could do to survive, besides basically hide inside our caves and hope we have enough supplies. One thing you can do is make absolutely sure your savings account is invested in assets. Also, consider a general warning that Munger repeated throughout his career. This is for whomever wants to live in the world of investing and achieve long-term success. Get ready for the big ups and downs and the periods when there's a lot of agony and other periods when there's a boom. You just have to learn to live through them.